morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a quiet start following muted, or rather just say mixed global setup at this point of time. GIFT Nifty indicates a quiet start for the last trade, down by almost 0.2%. Talk about the US stock futures on Sunday. They were a little changed ahead of inflation and the corporate earnings data, and the US stock markets, how did they fare? Oh boy, it was a record high yet again. Wall Street and in Nvidia fueled rally week with another record high level, but Asian shares, they take a breather at this point of time near their 7-month highs. Pause ahead of the inflation feast. Well, you have range of inflation data coming in from the United States, Japan and Europe. Talk about FII, the important shares worth around 1,276 crore and DIIs too have purchased equities to an extent of 176 odd crore. The stocks that you need to keep an eye out on, or let's just say are under the F&O ban list, they include the likes of Canara Bank. Now, this is the fresh edition out there. Do bear in mind the fact that there's a board meeting which is going to be considering a split of the shares coming in for Canara Bank, but that's already added into the F&O ban. What stays or remains in the ban is Aditya Birla Fashion and Retail. Now, that's some momentum there, which has led to this amount of positioning in the F&O ban. And of course, we're also looking at Balrampur Chini, GMR Airports and Hindustan Copper, along with Piramal Enterprises and SAIL on the other hand, and Z2 still remains in that ban. What comes out of the ban is Bandhan Bank and also Indus Towers. Apart from that, we're also looking at Nalco, which has been removed out from the list. But that's that when we have the trade set up. Of course, it's a day when, again, RIL and HDFC Bank, both of these stocks will be in focus. But would you really need to eye out on what's the strategy going ahead? And to get the recommendation and the top strategies of the day, let's bring in Prashant Sawant from Catalyst Wealth. Morning there.
Hey, morning, Nickey, and morning to all the viewers.
What's the strategy now? What are your top recommendation? A muted start in offing for the last street, or how are you looking at it?
So, Nickey, I think we had a very good rally in Nifty last week. We managed to touch almost 22,300 spot. Currently, as per pre-open, we are around 40 points down, quoting around 22,170, 165. I think for the week going ahead, considering it's a monthly expiry, 22,000 level holds a lot of importance. And on the upside, 22,300, 350. So we are right midway between the range. And I would say that a range breakout would be crucial, or else the expiry would be more in the grip of option writers. As far as Bank Nifty is concerned, 47,200 holds a lot of importance. We have not yet captured that zone on a closing basis. So once we close above 47,200, we can start looking out for 48,000 levels. In Bank Nifty, I have a very clear view. Unless and until we don't close above 47,200, I would wait for a breakout.
All right. That's the recommendation coming in for Nifty and Bank Nifty, but it's not a good start coming in for the markets. 0.3% wiped out in early deals. Bank Nifty also. Losses of similar magnitude as much as for Nifty, 0.3% raised in early deals, and advances and declines at this point of time. Clearly, the market breadth is in the favor of advances. For now, it looks like an activity which is more individual momentum driven activity that we're looking at. But overall, if you see, it is a muted start, much aligned with the anticipation. Asian shares and GIFT Nifty already indicated of that start coming in for the large street. And small cap index, well, a bit of outperformance coming in on that one. 0.2% clocked in early deals. Let's also look at HDFC and RIL. These are essentially the two counters that the market would be eyeing in because of the index heavyweight that they are and the financial weight that they hold on the index. Well, for HDFC Bank, at least it's a positive start coming in on the Monday. But let's look at RIL. A lot of activity happening around that, but a bit of losses coming in early deals to almost 0.25% lost for RIL. So a bit of, those losses are kind of justified by looking at this index heavyweight losses. HDFC Bank on the other side seems to be capping those losses just as yet. Let's, talk about the metal index first before we gravitate our conversation towards the top gainers and the top losers. Of course, a bit of momentum also has been developing for the IT counters. Metal index, like you can see on the screen, 0.25% clocked in. This is an index which has done rather well from the start of the year, and this month has been actually no difference for metal. Well, also let's look at IT index, right? There is a bit of support which is rented from the IT index, but down and out in trade, 0.6% lost in early deals. Let's look at top gainers and the top losers out there, just to see the fair bit of momentum shaping up. Well, L&T, Adani Enterprises and Grasim, yet another day of gains coming in for Grasim after the launch of their products and the brokerage call that they've got. DRL, JSW Steel and Cipla. On the other hand, these are some of the top gainers that we have. Nestle, India, M&M and Ultratech Cement too. These are making up in the list, top gainers list. But let's look at the top losers out there. Asian Paints, where there is a bit of downgrade which has come in for Asian Paints, so no surprise for guessing there. CLSA has got that. We are going to be addressing that in just a jiffy. Titan, on the other hand, along with Tata Consumer Products, Bajaj Finance and Maruti Suzuki. Well, these are some of the top losers that you have. Prashant, come back to you and check with you. What do you make out of A? Let's talk about Grasim, which is one of the top gainers that we have. And on the flip side, we have Asian Paints. No surprise for guessing that, right? But what's your pick between the two?
Nickey, sorry, I could not get your question. It was Asian Paints and
Grasim.
Okay, so I think Asian Paints for the past whole week has been an underperformer. But at the same time, if you look at it, it's in the process of making a base. But I would not catch a falling knife. So I think my recommendation on this would be to avoid. And those who have positions, your strict stop loss now has to be 2850, 2850. It has been a very big underperformer, not only now, but for the past almost, we can say, past 2 to 3 months. It has not done well as compared to the index. So I think the right way would be to stay away from it. If I look at Grasim and the whole pack, I think it's showing a good strength, but Grasim specific is near a resistance, which is around 2250, 2300. So those who have position, they can trail with 2100 as a trailing stop loss. For fresh buy, I would wait for a close about 2300.
Okay, that's the word coming in. Of course, it's the second day of losses, beg your pardon, gains coming in for Grasim. There's a bit of development there. But how about Asian Paints? There's a downgrade which has come through. Would you recommend buying at these levels?
So I would not recommend buying at this level for sure. Historically, if you look at the stock, definitely it has given a very good return year on year for the past almost 10 to 15 years. But I think I would not go by history now. The dynamics are kind of changing. So I would wait for the stock to go once again above its 3000 zone, which would be hardly 4 or 5% from the current level. But that would make a statement that it's back out of the woods and you can buy it. So buy it only about 3000 spot with a stop loss at 2900 positionally, and look out for targets around 3200, 3300. But don't buy unless and until you see a close above 3000. I would wait for that close.
Close above 3,000 in market, which is purely just getting more heated and competitive. But let's address the stocks and news and then gravitate our conversation back to Prashant. Well, Kotak Mahindra Bank, that's the one that you need to keep an eye out on. The bank, along with Zurich and Kotak Mahindra General Insurance Company, together have mutually agreed that Zurich will acquire in 70% stake in Kotak General. That's got to be through a combination of primary and secondary acquisition in a single tranche for a consideration of 5,560 odd crore. As per the disclosure earlier that in at least November, Zurich Insurance was supposed to make initial acquisition of 51% stake in Kotak General through a combination, and now that subsequently gets increased to nearly 70%. The second one is not an encouraging one, at least for Kolte-Patil, because the promoter Naresh Aniruddha Patil has sold in 2% equity through an open market transaction, of course, and this is equivalent to 2% of the paid up equity capital, of course, that we're talking about. It's a Pune-based real estate developer, as you all might know, and the shares have been offered in by the promoter at an average price of 487 per share. The stock right now has been reacting positively. Looks like it's an overhang, which is now done past with, but it's at a significant discount from the current market price. The market price is sitting at 497, whereas the shares were offered for 487 rupees. So there's clearly that 10 rupee discount that you can see. Meanwhile, who has purchased? White Oak Capital Mutual Fund has bought in equities at an average price of around 487 per share. Another day, another trouble coming in for 197 Communication. RBI has now advised in the National Payments Corporation of India, NPCI, to examine the request of Paytm to become a third-party application provider, that is TPAP, the provider for UPI channel for continued UPI operation of the Paytm app. Now, advised in the event of NPCI granting in that status to OCL, it may be stipulated that Paytm handles are to be migrated in a seamless manner from Paytm Payment Bank to a set of newly identified banks to avoid any disruption. Well, this is a sort of relief. If you see, there is like just softening down that blow, if at all, if this were to happen. And for like past consecutive sessions, we've been that rally coming in for Paytm, and in today's session too, you're seeing that 5% uptick. No surprise for guessing there. It's a point where probably investors want to get in, but the upper circuit limit is not going through. We're going to be chatting about that. Also, Canara Bank board is going to be considering a split of equity shares, and a very important development, that is Asian Paints, beg your pardon, where the brokerage has, CLSA rather, has downgraded the rating to sell, and the target price has been slashed to 2,425 rupees from a number of 3,215 rupees per share. It talks about the competitive intensity in the sector setting in and likely to heat up. It's also slashed FY25-26 calendar year estimates by 8 to 10% and talks about the company likely to emerge as a leader post the shakeup, but not so soon. It also de-rating likely move to its 15-year average multiple right now. So that's a bit of valuation problem also, along with the competitiveness that you're looking at. But Prashant, I'd want to chat about Paytm, because that's one counter which perhaps is not giving an entry point and has been hitting circuits after circuit. How are you looking at it?
So I think, Nickey, if I were to talk about a broader picture, 2100 IPO quoting 450, I think it's a well destroyer. So I would avoid it, and I would not be in a rush to buy unless and until things settle down, there is a clarity. And I see that in terms of price action as well. So from me, the recommendation would be to strictly avoid this.
Strictly avoid this. We've seen multiple session of gains coming in for Paytm, and of course the stock isn't really giving us an entry point, or rather not giving the traders an entry point to now enter into the counter. But Prashant, we're just going to leave it at that. Thank you so much for taking out the time and having that conversation with us. Coming up next, we have a fundamental discussion on board. ASUTOSH MISHRA, who heads the research institutional equity at Ashika Stock Broking, with us. Morning there.
Morning.
Ashutosh, let's start off with your initial assessment of what sort of ideal view that you have overall on the markets right now. Like most of the experts are penciling in a pre-election rally coming through, and this being a through and through a bull market. Do you hold any different perspective, or you belong to the same camp?
So my view is that most probably we are not going to see a very aggressive rally in the market, like which we have witnessed in 2014 or 2019. Simple reason is this time there is a relatively lower uncertainty regarding who is going to form the government. So from that angle, market is a bit certain that yes, most probably we will be seeing the current government returning back post that, and that uncertainty is out. And that's why the similar type of volatility which we used to witness in the election period may not be there. Directionally, market will remain on a positive front in my view from here on, because if you look at the earning trajectory and the way India story is panning out on a global scenario, and the emerging market inflows post what is happening in China, we will remain in a positive trajectory, but we are not going to see similar type of volatility which you used to see before the elections.
All right, point well taken. Let's talk about a sector which is now heating up because of the competition, right? Grasim Industries has launched in a new, much awaited entry in the paint sector with the launch of company's Birla Opus range. Its foray into paint industry is expected, obviously, how do you view it? Expecting to shift in dynamics for the industry. We've already seen a downgrade today coming in for Asian Paints, which is expected to be a leader again in the market share, but after a span of 2 years, maybe the valuation also seemed to be a bit stretched. But overall, what's your view on the new entrant for the space and for the companies that you like on the basis of the valuation pecking order?
Yeah. So if you look at the paint space, the capacity addition in the paint space is too large at this point of time across the companies, including Asian Paint. We have seen the capacity addition coming in a very big way, and there are many new players which are entering apart from the Birla in this space. So what we are going to see that the margin pressure, especially, will be quite high for the current incumbent. So in that perspective, if you look, probably for no, we need to wait for 6-9 months to take any view how things are panning out in this space. When in past, whenever we have seen the large competition comes in, lot of no impact is there on the financials of the current incumbent. Although Asian Paint is very strong, they are very strong network in the market. Their brand positioning is very strong, but we need to wait and see because the competitor is also very well-known brand in the same segment through the cement part of it, not through the paint. But they have enriched ecosystem to play into the paint also, and the type of launch which they have done across the India and know the type of plant and branding which they are trying to build in. We need to wait to watch for it.
And within the space, what do you like in the pecking order of the valuations?
So if you look at, we will prefer to be play with the Grasim this story because Grasim has many other things which is working quite well for them. So better to play with the Grasim display and Asian Paint, I will say avoid at this point of time.
Okay, Ashutosh, let's also talk about the AI-led rally that we're witnessing right now in the US market, of course. Any traces back to India? Any stocks that you think are the stocks which perhaps the street is now perhaps not looking at and could catch up with the traction in the coming 2 months or 3 months for that matter?
We don't have direct AI stocks in India as such. Some small caps we can name out of there, but that will be not the right composition. What I like to get is that the type of AI frenzy which we are seeing, and that is quite evident from the NVIDIA numbers in the US, if you look at, is clearly indicating that a lot of things is happening. Now is that if something great is happening on chip front, that at the same time something need to be done on software front. On that front, we clearly see that Indian software service provider will continue to get more business on that, and our companies are getting ready for that. So next financial year, if you look at currently people having very negative view on IT, we are holding a positive view on IT and clearly see that growth will surprise what compared to what market are expecting at this point of time, and it will be mainly led by the AI related works, apart from the general work which will continue to grow at a lower single digit plus roughly double digit growth in the AI industry. We are going to see for the Indian IT companies, and that will be the real driver for the revenue growth in the next 2 to 3 years perspective.
All
so
right.
Still to play the AI part, I will prefer to play with like TCS, SCL. That will be the better play at this point of time for the larger market segment. Yes, some smaller companies are there who are trying to do something individually on AI front, but still not significant one.
All right, now that you've spoken about IT sector, and we've already seen some kind of support being lent in by the defensive space per se, between pharma, FMCG and IT sector, which are the sectors that you think are now showing concrete green shoot signs? Sure, we've seen fair bit of traction coming through IT, and there is a bit of volume recovery hope will still hinges from the FMG sector, specifically Britannia, which reported good set of volume growth numbers, at least sparking off that little hope. But between the three, what do you like?
So we like pharma the most. A lot of positive tractions is taking place in the pharma. Drug shortages in the US, and the demand for Indian drugs across the world is improving at this point of time. And like the China plus one, which we used to discuss out there, is now really working out quite favorably, and we are way ahead in the pharma as compared to China front. But if you look at destocking of COVID era has also been completed out there. So the demand in the pharma sector is very, very strong from both domestic as well as international front. Pricing in the US is also very favorable. So keeping that in mind, I think the pharma will be my first pick, and followed by the IT and then FMCG. FMCG we like only very few company like Tata Consumer. Varun Beverages. These are the few companies which we like. We still are not able to make very strong view on a large FMCG player. Simple reason is that a lot of disruption is taking place in the FMCG sector at this point of time, mainly from the smaller players using the omni-channel present of Amazon and Flipkart. They are able to deliver the product to the last mile and giving a lot of competition to the larger player, which have and that's why we are not seeing the volume growth, especially for the larger players. So we will be continuing to focus on a company which are really expanding their brand, expanding their presence, and that data consumer fits quite well.
All right. How about the old economy stocks? Do you think these are something that people or the investors need to keep a closer eye out on now? Something like an L&T, something like an HUL, something like an SBI perhaps for that matter. Today there is a CLSA which is, given a buy tag, of course, which has been reinstated for L&T, and they see a 28% upside on the healthy order pipeline. Talk about that first, and also within the old economy stocks, what do you like and why?
So L&T is surely doing quite well. The thrust of government on infrastructure building, as well as the L&T list, where the lot of positive flow is taking place at this point of time, we clearly see L&T to be doing quite well in the coming quarter and years. At least for next 2 years, L&T is very well placed, and even the diversification of the whole business. And as if you do the SOTP, other part of the business are doing quite well also. So in my view, L&T from the old economy stock, they are really very well placed. SBI has seen a very sharp rally, and if you look, probably fourth quarter will be not as great as what market is expecting, but FY25 is going to be very good for SBI. So one simple reason for SBI is that their OPEX will be quite lower compared to what they have done in this year. There are a lot of one-time employee-related provision has been taken care in this year, and which will be not there next year. And apart from that, in the last 2 quarters, we have seen loan growth picking up for SBI. So the earning momentum from that loan growth will be quite visible in the next year out there. So next FY25 is going to be quite good for the SBI. Yes, for time being, Q4 we may see some more one-offs come in, especially from the employee-related expenses.
I think let's also talk about the broader theme coming in. Let's talk about a company which is a sector in itself, RIL, the index heavyweight, which has hit the record high. It's working like a charm for investors these days. Along with that, put a fair bit of Geo Financial Services also. It's been scaling that new highs, record highs that we've been witnessing for the previous week, rather. How are you looking at these two companies now? And between the two, of course, it's not a fair bit of comparison, but since they belong to a particular group, let's talk about the prospect. Which of the company you think has a brighter outlook as compared to the other, and why? And what kind of valuation do you find that attractive? What kind of upside are you even looking at?
So RIL have a lot of more positive compared to the Geo Financials. Things are still not very clear in the case of Geo Financials in the terms of the execution of the product. Still, if I look pure earning wise, they are earning only from the treasury side of it, and we need to see how all other businesses which they are entering into, they are able to scale it up, because financial service business is a bit different. But yes, if you look from the valuation perspective, it is currently reasonably priced at this point of time, and if futures they are able to expand in the right direction, then things will be positive for them. I am more positive on Reliance. Simple reason is that if you look, many of their businesses are doing quite well. Telecom and other we already have discussed, but what is most positive surprise in the last 1 or 2 months is that oil to chemical business, where a lot of positive things is happening. New energy business is also quite well picking for them. So if you look from the perspective, from the 3 years perspective, Reliance stock has also consolidated quite a lot in the last 2-3 years. And now many of these investments which they have made in the past will start paying off, I think, in probably FY25 or FY26. And that's why Reliance is a better bet compared to the Geo Financial in my view.
All right. What also I would like to chat about is Vodafone Idea. There have been umpteen number of instances where we've already seen that fundraising is about to come. There's a revival which is expected to take place at least thrice or 4 times that I remember in the last 2 years that you've heard this development. The recent add to that was the chairman's speech that they are looking for fundraising plans coming in for Vodafone Idea. The government, however, there's this Moneycontrol article which says that government is not in a mood to dilute stake in Vodafone Idea, and the government does not want to divest the state before the latter actually works out a credible revival plan. Now, the debt part is where there's fair bit of worry there. Rather, the debt is almost of around 2.2 lakh crore, and the company has been sitting with deep losses, but has seen the share prices spike by over 150% over the last 1 year. Feb 27th is when the board is going to be meeting in for the revival plan. What is your understanding of the stock, and would you kind of suggest a buy at this level with this given outlook and the uncertainty, or how are you looking at it?
So in the case of Vodafone, the most important trigger point for me is the equity raising. The large equity raising is required for them, and this either has to come from existing promoter or new investor has to chip in. Without the large equity raising, the company will not able to survive the current financial metrics out there, because the type of debt which they have, that's clearly putting that they need to do something on to deleverage themselves in a greater way out there. Continuously, they are losing their customers. So yes, business proposition fit quite well, but someone need to put a large chunk of money into the company. Once that comes in, then probably we are able to make any mind on that. At this point of time, more speculative news is coming in. This fundraising exercise is going from the last 2 years. And I know this many times we said that this is going to come, right issue is going to come, but no, nothing concrete has taken place. So I will hold my any view on the stock till the time the complete plan on the fundraising comes into the play, and what they are going to do post that is we need to look at business growth. Other part and opportunities are quite large in that space. Only now there is a 3 or 4 players remaining in the telecom space out there. So that is there, but the company needs serious money at this point of time, and it seems from the last 2 years that nobody is ready to commit to that money.
All right, the last question that I have for you is about Paytm. A series of upper circuit limit being hit by Paytm. After the series of flip-flops that we've seen from the regulator to the company, now the company again, RBI directing in more instruction coming in on whether or this needs to be, to resume operation from March 15. That's a bigger question. But do you find the stock attractive at these levels after the sharp drubbing that has already taken through in the last 1 year? Sure that we've not seen any kind of entry points because of the upper circuit limit being hit by the company. But otherwise, do you think it's a valuable bet at this time, or a bit of risky bet which has a higher reward ratio?
No, I will not going into the Paytm. Simple reason is that there are many other opportunities available at much attractive valuations and prices at this point of time, rather than going and playing into the Paytm point. Even in the UPI ecosystem, if you try to Paytm is not the market leader in that front, and the type of regulatory problem which they have faced, I think once the thing settled, there will be more issues will be there out there. So I will not be there in the Paytm till the time everything gets settled down out there. Rather than you have many more good opportunity in BFSI space available at this point of time. Bet on them. You will be much more peaceful and in earning money.
All right, that's pretty much a safe and wise, sane investment advice coming in from ASUTOSH. But we're going to just leave it at that. And thank you for taking out the time and having this conversation right here with us. Well, that's been the story of Paytm. It's been quite a wild child, I would say. It's something which has gone on, and at least last 1 week, 2 weeks, we've seen fair bit of traction coming in on the name, despite the kind of regulatory overhang that the stock has been witnessing. But remains to be seen if there is further upside to this one. But that's all that we have in this edition of Trade. With this, it's a wrap, and goodbye from the entire team who puts this piece together for you. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.